Usually, financial management encompasses the areas of assets and liabilities, where you try to manage the inflow and the outflow from a cash flow perspective. And from a balance sheet perspective, you try to manage your assets and liabilities, which is match assets with your liabilities. So, it is a holistic picture on how to manage your cash flows in the most optimum manner. This is so there are obviously many vague definitions and many definitions about financial management, but from an NGO perspective, I think what is very critical is that they time the investments, the receipts and the inflow and the outflow in such a manner that it doesn't lead to a gap in the arrangement. That is usually what a financial management for an NGO means. Usually, assets are those category items which sit on your balance sheet, which you own or are in the process of owning, which are known as current assets, for example. And liabilities are usually what you owe to the market or to your investors or to your shareholders. So, again, from an NGO perspective, assets is all your receipts, which is cash in your hand, which is your amount going to be spent on the project, which is work in progress. All of that is asset. And on the liability side, all the money that you've taken from your stakeholders, from your trustees, or from different organizations which you are going to spend in the near future, those will sit on the liabilities. I think for an NGO, it becomes very critical to, have a very proper accounting as well as a financial management system because the NGOs are usually, borrowing money on a basis that they also have to give a tax certificate to the end borrower. So in a way, apart from the social responsibility that they are supposed to spend the money, it is also a matter of a legal a legal understanding, a legal framework, wherein you have to be very cautious that all the money that you bring in the system has to be properly recorded and properly managed because it is not your money. You have a fiduciary responsibility to manage the money in the best possible manner. And also from an accounting point of view, where you have to, at the end of the year or during the year, you have to present reports to your stakeholders that what is happening with the money, what money is spent. For example, if I'm not wrong, you have to spend a certain money during the, I think, 80 or 90%, and only 10 or 20% money can remain in the corpus. You cannot have more money lying in the corpus which you have collected. So you have a span of 1 year where you have to use that money in the project that you've earmarked. Now, a lot of times, what happens is, in financial terms, we call it asset liability mismanagement, ALM. What happens is sometimes you sit on money where you've collected a lot of money, but you don't have the project timelines to allocate it. And sometimes you need a lot of money. Your projects are ready, but you don't have the donors or the way of getting the money in the system. So usually what happens is this ALM mismatch, asset liability mismatch. So you don't want to run in that situation. So your planning has to obviously be very robust because you cannot go wrong here. It's a very difficult market any which ways. NGO is not a very easy market. Raising money from corporates again, though it is CSR. For every corporate there are five NGOs pitching to the same corporate for the same CSR fund. So the idea is that the one place you cannot go wrong, except for your strategy, is the asset liability because uh, corporates will not be very happy if let's say you take a 1 crore from XYZ Limited and you don't spend it at the right time, or you have a problem in terms of spending. They also are in a soup if there is query from the income tax department because they also have to have proper records that the money is being spent in the right direction. Just donating does not help it. It has to go, it has to match to the T. That is how usually all of this works. So all NGOs are, I know it is very difficult, easier said than done, but I think all NGOs will have to time their spending and time their borrowing in such a manner that there is not much gap and they don't sit on a lot of money and not utilize it. Accounting management and financial management are completely different things. Accountancy has to do with the fact on how you report or how you manage the books of accounts, which an NGO has to maintain or which an institution has to maintain. Financial management has to do with your cash flows and the purchase of your assets or the disposal of your liabilities. So accounting is more of a recording tool. It is more of a legal representation on where your money is sitting on how it is lying. While financial management involves a lot of decisions on where to invest the money, how to invest the money. If you are sitting on, let's say, a certain amount of funds, NGOs cannot put their money in stock markets, or NGOs cannot use that money for derivatives. They have very limited avenues, like putting their money in liquid funds or putting their money in FDs, fixed deposit with banks. So financial management is the decision of using your money, while accounting is the decision of how you represent the money that you've got and where you are going to spend.